Take a look at the market. They actually came off lows, off highs in the first half of trading session. We'll get you the management of Havells in just a moment from now. The numbers actually have come out, and we will have the management joining in. Okay, so we have Mr. Rajiv Goel with us. Mr. Goel, good afternoon. Thank you very much for your time. The first quarter numbers are out. Talk to us about your revenue growth, which has marginally gone up this quarter, and other factors which have played this quarter.
I think Havells is now a portfolio of various products, so I think you will have to break it up. You see, largely if you look at Havells as a standalone ex-Lloyd, the growth has been 6%, which we would believe is still fine considering the market scenario. On the Lloyd side, there had been a decline purely led by the LED business, and as we have mentioned that there has been disruption in the LED portfolio and the industry. There are a lot of Chinese players which went online, became very aggressive, which was sort of reacted by the leading players in the LED industry. Lloyd is not a very significant player in that, and we also had to follow the course. So that's why we see the decline both in the revenues as well in the profitability of the Lloyd business, which is largely led by the LED. And LED in these two quarters, Q2 and Q3, form a large part of Lloyd business. So AC is normally starts from January again, as these are the winter seasons. So similarly on the ECD side in Havells, if you see, the growth has been fairly robust at around sort of 14 to 15%, and there in all the product categories we have registered good growth, which we believe is led by the market share gains, because industry has not grown to that extent. On the switchgear and the industrial switchgear particularly, as well as industrial cables and professional luminaries, which are largely linked to the real estate and the industry, there we definitely see a moderation in the demand, and we slight decline also. The primary reason being that there is a slowdown in real estate for some time, but that slowdown now seems to have spread to the private capex and the industry side as well. So that continues to remain muted. But on the consumer side, there is a bit of a deceleration in the industry. But overall, our performance has been far better because of the kind of steps we have taken to gain market share in the last quarter.
Talk to us about how the margin performance went this time around, the factors which are playing on the margins, and are there any headwinds which you are witnessing on that front?
So again, the margin contraction, as I said, if you look at deconstruct the portfolio of Havells, is on the LED side in Lloyd. As far as the Havells is concerned, most of the places either we have improved or maybe sustained margins. We believe going into the next half on H2, you could see certain improvement on the margin side. There is a benign commodity environment. There have been larger consciousness in the company on the non-essential cost. So there is a bit of a belt tightening which is happening in the company, and I think the benefits of that should accrue in H2. So on the margin side, we believe the things should improve. As far as the Lloyd is concerned, LED business still will have a overhang on the Q3. So barring that, we believe that the profitability and the margins of the business should see an uptick in the next 2 quarters.
Let's talk about a little more about the Lloyd business. How exactly is it panning out from here on? Other synergies which we spoke about earlier have started to kick in. Talk to us a little more on that front.
You see, the appliances industry in general has been under disruption. Last year, if you recall, because of the slowdown in the AC industry, there was a big move on price reduction and the downtrading by the industry players. On this LED side, I think this is something which has happened in this quarter, and as I said earlier, this something will continue in second quarter in the sort of Q3 as well. So barring that, we believe the performance should improve from Q4 and then going into the next year Q1, which is the large AC seasons for Lloyd, which is the mainstay of Lloyd. You see, Lloyd is 70% AC business, but in these 2 quarters our turnover is also low because the AC is not the key businesses in this quarter. You see, there have been certain changes on the Lloyd side for the last 1 year. There have been changes on the distribution side. We are now present in the large format stores. Earlier we didn't used to be there. There have been some movement by the large our distribution partner as well, because we believe we have to ultimately build the business for long term and not get into a short term sort of negotiation on those issues. So these things now seems to be behind us, but you will appreciate to build up any new side of the distribution and to offset the incumbent it does take certain time. So I think if you look at the next 2 quarters, the Q4 and Q1, you will see improved performance from Lloyd, because most of the corrective action which should have been taken seems to be now already implemented.
All right, sir, we'll let you go in that one. Thanks so much for joining us, and good luck in future for the synergy that Lloyd's and overall business as well.